What's up guys, and welcome to WSM Research. Before we get into the video, keep in mind that we are not financial advisors, and this video is for entertainment purposes only. Make sure to do your own research and consult with a professional before making any investment decision. Today we're going to go hunting for bargains in the tech-driven sell-off of recent weeks. The tech-heavy Nasdaq has dropped close to 10% from its highs, which doesn't really seem like that much in and of itself, but is also about flat for the year, which has bucked the trend that investors are used to, with tech only going up and to the right. Certain specific tech stocks have done much worse, with some stocks such as Tesla down significantly for the year. Tesla is currently down 35% from its January highs. Meanwhile, Cathie Wood's formerly supercharged flagship ETF, the ARK Innovation ETF, is down even more than 35% off its highs. When you take a step back and look at the price charts of these securities from a distance, the recent sell-off doesn't seem all that bad. In fact, it seems pretty much in line with the type of sell-off you'd expect every year or two. Because of this, long-term investors shouldn't be too worried about the sell-off, and can instead use it as an opportunity to find bargains on good companies whose stocks used to be too expensive to invest in. That's the focus of today's video. We're going to talk about a stock that is currently experiencing extremely rapid growth, has good profit margins, and is disproportionately beaten down by this most recent sell-off. The stock we are talking about today is Poshmark. We've covered this stock before on this channel back in March when it was trading in the $40+ a share range. Since then, they have released a 10K and first quarter earnings and tanked 22% in one day as a reaction to those earnings. After the most recent selling, Poshmark offers great fundamentals and rapid growth for a compelling high growth plus value proposition. For those of you who haven't seen our first video on Poshmark, here's a brief description of the company and how they make money. Poshmark is a social commerce marketplace similar to Etsy and eBay, where people can sell or buy used clothing, shoes, and accessories. New clothing is a massive expense for many young people, as they often get bored of an outfit after wearing it just a few times. Some people buy so much clothes that their wardrobe is overflowing and they end up having to throw away half of their clothes at the end of each year. This isn't just a waste of money, but it's also a huge environmental problem, because most of the clothes are thrown away and end up in landfills. Poshmark aims to solve this problem by giving consumers an easy way to resell their used clothing. This is a win-win because the seller gets paid for their unwanted clothes that they would otherwise throw away, and buyers get access to high-quality brands at steep discounts to retail prices. Poshmark makes the entire process very simple. To put an item up for sale, you just have to take a picture of it on the Poshmark app, and it can be on the marketplace in less than 60 seconds. Once the item is sold, the seller prints out a prepaid shipping label and puts the item in the mailbox to be shipped out, and they'll receive a digital transfer of funds once the item is delivered. The company has met incredible popularity among young people. There are many websites and blogs dedicated to explaining how to get the most out of selling on Poshmark. Many people have listed their items from their wardrobe as a way to make money from home and to clean out their unused items. Because it focuses mainly on higher-end items, it is able to attract buyers and sellers from all socioeconomic backgrounds. The large supply of items on the platform, from people who own high-end handbags, clothes, shoes, etc., has attracted a lot of buyers too, who want to get high-quality items at substantial discounts to new. A lot of the time, items on the platform are in very good or like-new condition. As a result, sellers are engaged by getting to earn money for their unused items, and buyers are engaged by getting access to highly sought-after items at good prices. We've said before that Poshmark was growing at an incredible clip while being able to sustain some pretty impressive margins. However, we only had the company's S1 filing because they had just gone public. Now we have a 10K to parse, giving us much more detail and history of their operations. In it, we can see that Poshmark has been growing since 2018, even during the pandemic. Their revenue increased by 30% in 2020 compared to 2019. Their costs are not low, but a large portion of their costs are marketing. In 2019, for example, they spent $132,000, or 65% of their revenue on marketing. This caused a $50 million loss for the year. In 2020, because of the pandemic, they reduced marketing to $93 million, and thus were able to reduce their overall expenses and make a $23 million profit. But $93 million in marketing is still a lot of money, more than a third of their revenue. This is basically management saying that the opportunity for them to grow is too good for them to just worry about making a profit. And based on their revenue growth, that seems to be true. Another positive aspect for their income statement is that they're actually making a small amount of positive interest income. That is because they have no net debt, and a significant portion of their liabilities are just funds payable to customers. These liabilities are not interest-bearing, while their cash and marketable securities are making some return. This allows them to actually earn extra income on their assets, effectively an arbitrage. The interest income is small, but not having excessive debt frees them to keep the majority of their operating cash flows as actual profit. But more recently, on May 12th, Poshmark announced their first quarter earnings. Despite them reporting fantastic numbers by any account, the stock opened 13% lower on the next day and finished the day 22% below where the stock was right before earnings were announced. The only real blemish to the earnings call was a net loss of $20.7 million, compared to $11.2 million in the same quarter of last year. However, if you read into it in more detail, it turns out that stock-based compensation was more than $20 million higher this quarter than a year previous, likely relating mostly to the one-time occurrence of Poshmark going public. High-level executives usually get huge bonuses when their companies go public in the form of stock. Adjusting for that, Poshmark would have had actually a small profit this quarter. More importantly, their revenue showed no signs of slowing down this quarter. In fact, they appeared to be accelerating if anything, up 42% year over year. Their gross merchandise value also grew more than 40%, and monthly active buyers increased nearly 20%. Again, their marketing expenses was quite high, slightly higher than the first quarter in 2020. This proves that they are still trading profitability for growth. They aren't even that unprofitable, and yet their growth is massive. So it's hard to criticize management after their most recent earnings. So where does that leave us now? Let's think about what the fundamentals are likely to be this year. Poshmark is on track to increase revenue more than 40% this year, but let's assume that they'll grow revenue just 40% compared to 2020. That would put their 2021 revenue at $366 million. At a $2.57 billion market cap, that puts them at 7 times revenue, which is insanely cheap for a company growing 40% per year. We can also expect their costs and expenses to go down in the future significantly as things like research and development subside, and general and administrative expenses benefit from economies of scale. Also, eventually they can taper down marketing expenses as a percentage of revenue as they become bigger and more well-known. This will lead to margin expansion, further improving profitability. We estimate their net profit margin could be as much as 40% at full scale. Margins at that level would imply 2021 earnings of $150 million. Of course, that won't happen for many years because Poshmark is still growing and investing in growth. But to give you a sense of what their valuation would be today at those earnings, the PE would be an anemic 17.5. Plus, you'd be getting their rapid growth prospects for free. Combine that with no debt, an extremely non-capital intensive business model, and secular trends towards online shopping, and the future looks bright for Poshmark and for Poshmark shareholders. When Poshmark initially went public this past January at $42 a share, it immediately spiked 150%. Investors weren't just following the IPO and SPAC frenzy at the time. They realized that Poshmark was actually a really good company. By taking at least 20% of every single sale on its platform, with their only expenses being some almost trivial server costs, moderating its users, and doing whatever marketing management decides to do. But perhaps more importantly, they are also growing extremely quickly. We made our first video on Poshmark when it had cooled off to around its IPO price, but now it is even cheaper. After dropping almost a quarter of its IPO value, you could say that this stock is at a true bargain price. What do you think about Poshmark? Have you ever bought or sold anything on the platform, and what do you think about their growth and profitability going forward? Let us know in the comments section below. Also, don't forget to smash the like and subscribe buttons, and we'll see you in the next video. In the meantime, thank you so much for watching. WSM Research, signing out.